Hello and welcome. You're watching Business Today TV. This is Market Today. I'm Sakshi Batra, and here is where we will get you insights into what the market is going through, which are the top gainers, the losers on the Nifty, how are the broader markets doing versus the narrow markets, and where exactly should you be keeping your focus as we begin this fresh new edition right after 3 days of a weekend that the markets have already seen. 105 points of a decline is what the Nifty is going through right now. 19,533 currently on this one. When we talk about the sectoral moves, you do see most of the sectors declining in trade today. Led by Nifty Bank, 0.5% of declines coming in. So some weakness slipping through as far as the banking names are concerned. And you can see the private banks are also, looking at declines of almost 0.4% odd. Among the sectoral losers, you do see autos as the ones which are in the slowest lane today, 1.2% lower in trade, followed by oil and gas and also the metal names as well. Healthcare, realty also sulking through. The sector that is doing well in an otherwise dull market is the consumer durables, up by 0.6% odd. The PSU banks also up in trade by about 0.5%. Gains can be seen here. The broader markets are doing better today. The small cap 100 index is 0.5% higher in trade, and you can see the mid cap index also by about 0.3% up in trade right now as we speak. As far as the Nifty gainers are concerned, you do have names like HCL Technologies, Asian Paints, HUL, Titan, Bajaj Twins as Bajaj Finserv and Finance among the top gainers. On the losing side, you do have stocks like ONGC, Eicher Motors, Hindalco, Maruti Suzuki and Dr. Reddy's down in trade today. But the stock that we're going to be focusing on is definitely Vedanta, which is flushed with news flow right from Friday, when the company really announced a six-way split into the company, and therefore a six-listed entity conglomerate that we can look forward to going forward from here. And that has really led to a surge in the stock as well. Over the last 2 days, that is Friday, we already saw the momentum happening before the news had come in, about 5% of a move. And today again, close to 5% surge is what you see on Vedanta. 232, the current price of the stock, and 10% surge is what we've already seen on the stock in the last 2 trading sessions alone. Now, the big question is that, how should you as viewers, as investors really look at the demerger announcement, and is there any value unlocking going to happen that you could benefit from, and is there a fresh opportunity for you as investors as well? We'll try and understand all of this with our expert today. Mr. Avinash Gorakshakar now joins in. He's the Director Research at Profit Mart Securities. Very good afternoon to you, Mr. Gorakshakar, and thank you so much for taking the time out for this discussion. Well, Vedanta is clearly the talk of the town as far as the markets are concerned. Help us understand first up your view of how you analyzed the news of this six-way split that the company is going to be doing, and do you really feel this is going to be good news for Vedanta the company and also good news for Vedanta the shareholders? How would you analyze this?
No, I think, Sakshi, the Vedanta demerger actually has come as a very big surprise to the markets, because see, clearly earlier Mr. Anil Agarwal was focusing on the consolidated entity, and now they have decided to split the entire company into 6 different entities. Vedanta, will be the holding company. They will have control over Balco as well as Hindustan Zinc. So typically, holding companies don't get a significant premium. They trade at a discount to the market. But as far as the others, companies are concerned, I believe the investors, the shareholders would now get an opportunity to participate in these companies, in a very focused manner. And typically, market loves, companies which have got focused businesses. So the earlier model was of a consolidated entity. But the real reason for the demerger, according to me, is the fact that, there's a large amount of debt repayment which the company has to make by FY25. And I think on a consolidated basis, actually, it would have been very difficult. So I think the demerger is just a proposal to ensure that the debt repayment gets paid fast. So my sense is, there are going to be many ifs and buts. The demerger, first of all, has to be approved by the institutional shareholders. And most importantly, we are not aware how the debt is going to be distributed amongst all the companies.
Yes.
So I think it's going to be a little wait and watch before one actually comes at a clear view on the overall demerger which has been announced.
Very well pointed out by you, Mr. Gorakshakar. So that exactly is what I will try and understand from you. Ultimately, Vedanta as a company has a huge debt. $6.5 billion is what we are dealing with at the holding companies level. Now, this will be split into 6 companies. We do not know which company will end up getting how much debt. Now, as a lender, how would one really look at the split that is going to take place? We still don't have the details. The debt will be split between power, steel, the non-ferrous business, the oil and gas business. Do you think it will be difficult for the lenders, therefore, to perhaps look at any kind of allocation? The creditors may not be very happy. How would a creditor really look at this piece of news?
No, that is exactly, Sakshi, which I was telling you, that it requires the approval of the creditors, the bankers, the institutional shareholders. Because, see, I think dividing the debt into 6 companies is not going to be an easy affair. And let me tell you, the promoters have now taken out significant amount of dividends from the company, and now most of the cash has been taken out. So I think
Hmm.
now whatever royalty and dividends the company was giving to the promoters, that is now not going to be possible, once these 6 companies come into separate entities. So I think that is a big major negative surprise, for the investors. Although, here the promoters gained significantly because of the dividend payouts. I think now $3 billion is supposed to be paid by FY25. So I think
Yeah.
your point is right, that creditors approval, the investors approval, and large institutional investors approval has to be given, because only then this proposal will see the green signal, and we could possibly see the demerger materializing over the next, say, 12 to 15 months.
Okay, but the current liquidity concerns, does this piece of news really ease some of those concerns? Like you pointed out, about $4 billion coming on as debt repayment scheduled over 2024, 2025, early part of it as well. And the demerger is also expected to take about 12 to 15 months odd. So, does it really give any kind of a relief on the current liquidity situation that the company conglomerate really faces at this point in time?
No, I think on a consolidated entity, Sakshi, they had arrived at a situation where there was no further scope for raising money, and obviously that was the reason that they had no choice but to demerge the business. So I think, even if the proposal takes 12 to 15 months, this was bound to happen. Now, what is important from an investor standpoint of view is that, one good part is that they are getting 1:1, that is a mirror image of all the companies except
Yeah.
Hindustan Zinc, which is one of the prized companies in the Anil Agarwal group stable. One would have liked that even Hindustan Zinc shares are offered to shareholders, and that would have sweetened the offer to the shareholders, but that has not happened. So I think,
Yeah.
that is going to remain in the holding company, and typically holding companies don't get a premium; they list at a discount of at least 30 to 40%. So I
Yeah.
think for all said and done, Vedanta will remain just a holding company with 2 companies, Balco as well as Hindustan Zinc. But I think clearly, I think, one more trigger which the market is probably awaiting is that there could be possibility that the iron ore business, the steel business, and
Yes.
the business could be hived off. There could be a possibility that to raise some cash, they could get a decent premium for these businesses, and possibly, some strategic buyer could come in, or there could be an outright sale. So this could be the trigger point. So I mean, we will have to wait and watch for these developments, to materialize, Sakshi. But I think clearly, the stock has moved up because it has already been beaten down quite badly. It
Yes.
was trading at a dividend yield of almost 6%. So I think clearly there was value in it, but I think near term, all these triggers will play out, and then we'll get a clearer sense as what is the future trajectory for the stock.
Right. And you rightly pointed out that, the street is clearly waiting for an indication of which business are they going to hive off. Is it going to be the iron and steel business, which is buzzing right now as a talk as well? But what could be the valuation that the group could get if they hive off this space as well?
No, I think my sense is that the iron ore and the steel business makes a rough EBITDA of roughly about 5,000 odd crores. So they could get a multiple of at least 2.53 times. So roughly about 15 to 18,000 crores is something which, the market could expect a decent premium for that business. And I think the power business is also something which is quite attractive. Power generation is one area where a lot of investment is being, is coming, fresh investment, and existing companies also, if they want to sell their assets, they could get at least a price to book of at least 1.5 to 2 times. So I think to that extent, valuations from both these businesses could be attractive. But I think it all depends as to when the management makes these announcements, and clearly that would happen only when the demerger is clearly fructified.
Right. So, Mr. Gorakshakar, as a fresh investor, how should one really be looking at this piece of news? Does one now go ahead and buy Vedanta shares, looking at the opportunity of getting, 6 shares even by holding 1 share at this point in time? And what should the existing investor do? Somebody who's been making losses on Vedanta, which is the stock has been near a 52-week low already. So, what should that person do, and what should a fresh investor do at this point?
See, in the short term, Sakshi, I am not expecting a very strong quarterly number as far as September quarter results are concerned, because metal prices on a whole are down. Of course, the crude basket has benefited the company, but basically Vedanta is largely a commodity kind of play, and we have seen a very sharp depreciation fall in commodity prices. So I think you're going to see a very significant kind of fall in the profitability level. So I think fresh buying is not advisable, even if you were to obviously get 6 shares of some of the consolidated entity. I would believe it's better to wait for some more time, because at least in terms of the earnings growth and in terms of the earnings trajectory, at least the next 1 or 2 quarters are going to be extremely challenging. So I think you'll have to wait for some time. I wouldn't suggest a buy at these levels. And today's upside in the stock which you are seeing is largely a technical bounce. I think how long it can be sustained depends on the quarterly numbers which come out in September, and I think then the management commentary. So it's going to be a tough call. I would believe it's better to hold now. Fresh buying should be done maybe a little later, when you really get a chance to buy a focused company oriented approach like the aluminum business or the power business, which I think will get a decent kind of valuation over the longer term.
Right. So, because we are looking at in a future course, there will be 6 companies listed from the Vedanta group. As a fresh investor, if one were to wait for that opportunity to exist, as per the financials, which one of them will be a standout entity when we look at the current business and the future outlook going forward?
I think in terms of the opportunity, I think it would be obviously be the aluminum business and the power business. These are two businesses, and of course the crude basket, the way crude prices have gone up, I would believe that clearly the aluminum and the power business look very attractive. I think in terms of the opportunity cost and in terms of the kind of future growth potential, the aluminum business, when it trades separately, I think that would be a very good opportunity to invest over the longer term. Of course, the power business is also pretty good, but I think the real upside for these companies would come in when the commodity cycle actually takes an upturn. As of now, if you ask me, the valuations are not going to get re-rated, because China is completely messing out from the metal market and global prices have been relatively weak. So I think it would be the aluminum and the power business, Sakshi, which look interesting.
Okay, so that's as far as the Vedanta group, the demerger, and the outlook on the 6 listed entities that we are looking forward to. What is that really mean for the investors community at large? But overall in the markets, what's your current view, Mr. Gorakshakar? We've been seeing again a dip after a day surge on Friday. How do you see the markets panning out? Because of course, we are heading towards the festive season. Is there going to be a Diwali dhamaka this time around, or is there just too much of negativity when we talk about the global macros and now the run up to the elections as well? How do you see the markets?
Yeah, I think Sakshi, the markets always now operate on extreme optimism or extreme kind of pessimism, and I think we are looking at now an extreme pessimism scenario. So my sense is, when the markets started galloping, from April this year, I think everybody was happy, and now it's the exact opposite of that. So my sense is that on the broader market side, you're going to see a lot of stock specific activity. And I think now the quarterly result season for September is going to come out. More than the index, I think you're going to see a lot of quarterly numbers coming out, broader market also, a lot of mid cap, small cap companies putting out their numbers. So I think I'm pretty positive on several sectors, as I mentioned on your show earlier also, that looking at auto components, capital goods, real estate, building products, cement. So there could be a lot of opportunities for investors who want to cherry pick now. But I think, quick money has gone. So you'll have to take a slightly longer term period if you want to build your portfolio. But yes, longer term prospects definitely look good. In the near term, I think this market volatility will continue, because the next 6 months, we're going to see a lot of election related news flows. And that is something which will keep the markets pretty volatile.
Right. Just a word on the auto companies as well. We've seen mixed sales coming through, although the expectation was like, record bump up coming in September for all of them. But that clearly hasn't happened all across the board. Your thoughts on how should one be really approaching this space? This is the weakest link in the markets today. The Nifty Auto is dragging by 1.3%.
I think my guess is, I think numbers from commercial vehicle majors have been slightly disappointing. But if you see the passenger car numbers, if you see the two-wheeler segment numbers, pretty strong growth from TVS Motors, Bajaj Auto. My sense is, the auto component companies could definitely look at better numbers because ultimately, they are a kind of a, corollary, on the entire auto sector. So I think we are pretty bullish on companies within the auto pack, and I think that would be a better way to play the auto sector. I think clearly for some time the auto sector would consolidate, and probably once September quarter is over, we will be looking at some festive launches because festive season is a time when obviously volumes pick up quite significantly. So I would believe that this sluggishness in the market would not continue for a very long time. Maybe October November sales could be much better than what the street expects. So I think we are positive, but yes, slightly longer term. In the short term, the market should obviously be a little, wary and little cautious on the auto sector.
Okay, fair enough. Well, thank you so much, Mr. Gorakshakar, for being with us on the show and discussing all these insights with all our viewers. Always a pleasure having you with us on Business Today Television. Let's get back to the markets now and see what the trade is looking like as we speak. 105 points down in trade, so similar trade, half odd % of a decline coming through. Pressure on the Nifty bank clearly from the private banks and the financial services space. The autos, healthcare, oil and gas, these are the other pockets that are perhaps not really helping the markets to gain some strength. Broader markets continue to see some move. When we talk about the Nifty 500, clear action coming through on several of the PSU banks and smaller banks and some of the other stocks like, it's a mixed bag. You can see CSB Bank as a top gainer. A very sharp move coming through, 5.5% higher. Easy Trip Planners, 4.5% higher. CE Info Systems also higher by about 4%. Aster DM Healthcare, Chalet Hotels, EIH. So hospitality stocks really moving up in trade. Devyani International. So you do have those QSR chains also going up. So tourism, QSR, hospitality, perhaps that space is also buzzing in trade, and we'll continue to track all of that through the trading session for you. On the benchmarks, it's a slightly lighter day, but it's Vedanta that continues to be the focus, and we'll continue to get you, the expert views to find out where exactly can you be looking for value as far as markets are concerned. So do stay tuned on to with us on Business Today TV. Don't forget to subscribe to this channel and also continue to engage with us on our other social media platforms. That's Facebook, Twitter, LinkedIn and Instagram, where you can get flooded with a whole lot of news from the world of business and stock markets. So stay tuned. Many thanks. The Silicon Valley of India is facing a shutdown. As many as 44 flights to and from Bengaluru have been cancelled.